What if I told you that Goldman Sachs, Vanguard, Rowe Price, and some of the world's most sophisticated mining funds are all quietly loading up on copper stocks right now? Stocks that most retail investors have never even heard of. Today, we're pulling back the curtain. These are the four copper stocks institutions are buying before the crowd finds out. Let's get into it. Before we get to the picks, you need to understand why copper is the play right now. Because this is not just another commodity trade. In January 2026, Amazon Web Services signed a deal with Rio Tinto to secure copper directly from an Arizona mine for their AI data centers. That is big tech officially declaring copper a strategic resource. When Amazon starts contracting copper mines, you pay attention. Here's the macro picture. Copper demand is projected to increase 50% by 2040. JP Morgan is forecasting a 330,000 metric ton deficit in 2026 alone. And copper hit an all-time high of 6.11 per pound in January. That's not a spike, that's a structural shift. Think about it this way. AI runs on electricity. Electricity runs on wires. Wires run on copper. Every single AI data center being built right now is an industrial copper project. And the supply simply cannot keep up. There are no major new copper mines coming online until 2028 at the earliest. Ore grades at existing mines are declining. And EV adoption means demand keeps climbing. This is the setup. Pick number 1, Hudbay Minerals, ticker HBM. This is the one smart money loves and nobody talks about. Right now, HBM is trading around 27.45 on the NYSE. Its 52-week low was 7.94. It has already run hard. But here's the thing, at a PE of just 16.6 times earnings versus the copper industry average of 34.4 times, it is still trading at literally half the valuation it deserves. 83% of this company is institutionally owned. 373 separate institutional holders. The largest single shareholder is GMT Capital, a hedge fund, sitting at 9.4%. Vanguard is also in. These are not retail investors chasing a meme. This is serious money with long thesis. The catalyst most people are missing. Hudbay just acquired Arizona Sonoran Copper Company. They now own a large-scale copper project in Arizona, right in the zone where Amazon and Rio Tinto are already operating. The timing is not a coincidence. Analysts at Stifel reaffirmed their buy rating this month. Canaccord has a CA $40 price target. The most followed valuation model puts fair value at over CA $41, versus where it's trading today around CA $37. There is still upside here. Risk. The Arizona Sonoran acquisition was dilutive short-term. This stock has a beta of nearly 3, meaning it moves hard in both directions. Position size accordingly. Pick number 2 is the most underreported copper story in North America right now. Taseko Mines, ticker TGB. TGB is currently trading around $7.96 on the NYSE American. Its 52-week low was 1.96. Yes, the stock has already run significantly, but the story is just getting started. On March the 2nd, 2026, Taseko's Florence copper facility in Arizona produced its first copper cathodes. That is the first new greenfield copper production in the United States since 2008. 18 years, and almost nobody is talking about it. Once Florence reaches its nameplate capacity of 85 million pounds per year, Taseko becomes the third largest copper cathode producer in America. And here's what makes this really interesting in the current environment. All of that copper stays in the United States. In a world of tariffs and supply chain security, that is a massive strategic advantage. The numbers back it up. Q1 2026 revenue came in at $237 million versus $139 million in the same quarter last year. That's massive year-over-year growth. The company ended March with $322 million in total liquidity. They are funded. Cantor Fitzgerald just upgraded TGB to buy in May 2026. TD Securities and Canaccord are both at buy with Canadian targets of $13 to $14. The average analyst price target implies about 36% upside from current prices. Risk. Taseko carries significant debt. Florence is still in the ramp-up phase with full capacity not expected until 2027. Only 2 analysts cover this name, which is actually part of the opportunity. Pick number 3, Ero Copper, ticker ERO. This is the one where the institutional money trail is the loudest signal. ERO is currently trading around 24.56 on the NYSE. What makes this compelling from a valuation standpoint is the forward PE of just 6.52 times. That is the cheapest in the entire sector on future earnings. The current PE of 11.58 is also massively below the industry average. Now, here's who has been quietly opening new positions. Rowe Price International Discovery Fund, 2.4 million new shares. Goldman Sachs, new position. Vanguard through multiple funds, new position. Point 72 Asset Management, new position. Schoenfeld Strategic Advisors, new position. When you see Goldman, T. Rowe, and Vanguard all moving into the same name simultaneously, that tells you something. And crucially, institutional ownership is still at 72%, below the 85% threshold that signals overcrowding. There is still room for more smart money to pile in. Operationally, Ero is delivering. The Tucumán mine produced 8,467 tons of copper in Q1 2026. The company reaffirmed full-year 2026 guidance of 67,500 to 77,500 tons. Fitch upgraded the credit rating on Tucumán's ramp-up. They're also advancing the Furnas copper-gold project in Brazil in partnership with Vale Base Metals. That is long-term pipeline most people haven't priced in. Risk. Ero operates exclusively in Brazil, which adds geopolitical and currency risk. BOFA downgraded in February 2026, citing execution concerns. The stock is still more than 50% below its 52-week high, which is either a red flag or the opportunity, depending on whether you believe in the thesis. Pick number 4, Capstone Copper. Trades as CS on the TSX and CSCC on U.S. markets. Currently around CA 1126 on the TSX. The ownership structure here is what stands out. Orion Mine Finance, that one of the most sophisticated mining-focused private equity firms in the world, holds a mid-teens % stake with a board seat. They don't make casual bets. BlackRock, Vanguard, RBC Global Asset Management, and Fidelity collectively hold more than 30% of the float. This is not dumb money. Orion has a board seat and has consistently backed copper stories ahead of the curve. Their conviction here matters. What does Capstone actually do? They operate copper mines in Pinto Valley, Arizona, Cozamin, Mexico, and Montes Blancos and Manto Verde in Chile. Plus, they have the fully permitted Santo Domingo Copper Development Project in the Atacama region of Chile, one of the largest undeveloped copper deposits in the world. That's massive long-term optionality most retail investors aren't seeing. The analyst consensus target is CA $16.10. That's 42% upside from where it's trading today. The overall analyst consensus is buy. The stock underperformed the TSX by 20% over the last 6 months, which you can read as an operational headwind, or as a dip entry before a catch-up trade. Risk. The recent underperformance may signal real operational challenges. No dividend currently. Worth doing your own deep dive on the Chile assets before sizing in. Let's put it all together. 4 stocks, all verified prices as of today, May 14th, 2026. HBM at 27.45, $11 billion market cap, PE of 16.6, 18% upside to analyst target, backed by Vanguard, GMT Capital, 373 institutions, medium risk, TGB at $7.96, $2.9 billion market cap. PE not meaningful during ramp-up, use revenue growth instead. $139 million to $237 million year over year. 36% upside. Cantor Fitzgerald, TD Securities, Canaccord all at buy, medium-high risk. Ero at 24.56, $2.6 billion market cap. PE of 11.6, 40% upside. Goldman Sachs, Rowe Price, Vanguard, 0.72 all opened new positions. Medium-high risk. CS at CA 1126, CA $8 billion market cap, 42% upside to analyst target. Orion Mine Finance, BlackRock, Fidelity, RBC GAM, all backing it. Medium risk. These are not tips, these are research leads. Do your own research. None of this is financial advice. The copper window is open right now. Institutions are loading up quietly. By the time the crowd finds out, the easy money will be gone. That's exactly the story they don't want you to know about. If you found this useful, hit that like button and subscribe. I cover the stories others won't touch, the good, the bad, and the ugly. Two quick things before you go. If you're looking to trade crypto and stocks, use my Kraken link in the description, one of the most trusted exchanges out there. And if you want to start investing in stocks, check out SoFi Invest through my link. Open an active investing account with $25 or more and get $25 in stock for free. Link is in the description. I'll see you in the next one.